Thank you very much, Michael. Okay, we have the last and final panel of investors. Okie dokie. All right, Ariana Simpson, Lily Liu, and Rodolfo Gonzalez. Let's talk some money. All right, anyone? Don't everybody leave just because I'm getting up, you know. Hold on, calm down. All right. I got two. Where's Rodolfo? He's parking his car. That Lambo, huh? Yeah, not Rodolfo. All right. Okay. And I have two mics. You guys want to?
I was just sitting next to him, even.
Well, why don't we have you guys get up because they're going to start walking if we're not start talking. Okay. I'll give you back one.
Thank you. All right.
You get two.
It's very intimate.
It is very intimate. I think Rodolfo thought the panel was going to start a little bit later, but we're starting earlier, in fact. So maybe he'll join us. We'll see. All right. Well, this is a little bit more like a fireside chat then. Hello, Ariana. Why don't we introduce ourselves briefly? My name is Lily Liu. I had a company called Earn.com that was acquired by Coinbase sometime last year, and been looking at a number of cool things in the space since. And Grin is one thing that captured my attention. Ariana, you want to introduce yourself?
Sure. Hi, Ariana Simpson. I run a fund called Autonomous Partners, was previously at BitGo, and do a lot of infrastructure investing as well as privacy coins, hence why I'm here.
Yep. Great. So, first you just wanted to have a chat around, what is the macro perspective on privacy coins from an investor's perspective? Obviously 2017 was an active year for this concept of the ICO. There's a lot of excitement about stablecoins last year. It seems like there's always sort of been this latent kind of interest in privacy coins amongst the broader community, but that's a theme that I at least see coming up more and more. And so kind of what's your macro perspective on privacy coins? Why do they matter?
Yeah, well, I think it's interesting because on the one hand, they are a category which I think does have a lot of regulatory risk, even relative to the rest of crypto, which already has a lot of regulatory risk, just because it's not necessarily something that a lot of governments are going to feel comfortable with. On the other hand, I think that's exactly why they matter in large part, in the sense that, I don't know, personally, when I got into the space about, almost 6 years ago now, the idea of having private censorship-free, censorship-resistant money was obviously one of the key principles, and so I think that it's really important that the community kind of is bringing that forward. But yeah, again, I think it is a category that is exposed to some risk. From the investor's perspective, I think the economics of different privacy coins are going to vary pretty significantly. The way Grin was designed was not necessarily the most investor friendly. It's more designed to basically, incentivize adoption and allow for later comers to really participate in the network as well without being subject to kind of like a later penalty, if you will, based on the inflation schedule. So, I think on an individual basis, different privacy coins are probably going to appeal to different communities.
And so, the last year or two, the kind of market leaders in this space, if you want to see it that way, has been Zcash and Monero. And so how do you see Grin fitting to that space? So over and above sort of there being enough to go around in future generations and perhaps even sort of favoring folks who enter later?
Yeah, I think it's really going to depend on what ends up getting the most real world adoption. To be honest, I love this space, but if you go and look at how much people are actually using privacy coins or really crypto in general for anything, it's not a ton. Oh, here we go.
Got it. So, hey, Rodolfo.
How are you?
Good. So
Flying leap onto stage. Very good.
A little earlier.
Welcome to the party.
Hi.
So, Rodolfo, if I can I'll introduce you just for a second. Rodolfo is an investor at Foundation Capital's venture capitalist, kind of focuses on cryptocurrency. Seems like you spend most of your time on crypto.
For a bit of time.
Yes.
I love how you show up with your own cookie, too. It's great.
Brought it to share.
So we were just having chat around privacy coins, kind of from a macro perspective, why they matter. How Grin might fit in with the incumbents, if you will, Zcash and Monero, and then a bunch of the other ones that are, either waiting in the wings or in production. Various different approaches. So, what are your thoughts on that, Rodolfo?
I love it. I think when you think of how much governments and other, centralized institutions have invested in just being able to analyze every little piece of data that is out there that they can trace back to a single person and just, mine it and make money off of it. And on a relative basis, how little effort there's been to, effectively counter some of that and just give people a chance to just keep privacy for themselves. I think this is amazing. It's great that we have people that are dedicating time and effort to defend those values and ideals. I think it will make for a more balanced picture, because right now it's just so completely lopsided.
Yeah. From a social, you want to call it a social perspective, I think that many of us would agree with that there's a need for this socially. But then if you think about it from your investor's standpoint, right? One of the critiques of crypto from the beginning really up until now is, how is value being created, and who's actually capturing that value. And I think that, at least it seems to me, that for Bitcoin, the case for Bitcoin having value over time is, more or less the surest bet the least risky kind of bet you can take in crypto. But then for something like privacy coins, how do you see that as an investor? So in other words, how do you see this creating value and then capturing value?
Well, I would say if you start to look at, let's say, you can use sort of some proxies, I think, to start to think about how big privacy coins as a category could be. So, for example, you could look at offshore banking funds. So how many trillions of dollars are stored in offshore bank accounts right now? And, let's say 0.5% of that gets put into privacy coins, or 1%, and you can start to back into some of the math. Obviously, it's all very kind of theoretical, and there's a lot of unknowns. But as an investor, I'm generally interested in kind of the upside case rather than downside protection to some extent. And so, they are very asymmetric bets because at the end of the day, again, it's not completely out of reason to think that a small percentage of offshore banking funds, let's say, could in the next 5 to 10 years transition into privacy coins. And I think they're much more likely to transition into privacy coins than into even any other category of cryptocurrencies. So, it starts to become a pretty attractive investment category.
So then, how do you think about, so privacy, in my perspective, is one feature of several when it comes to money, right? When it comes to money, and whether you think about the money use case or the kind of world computer use case. And so, if you think about offshore funds, yes, they value privacy. They also value stability and the value of their investment, right? If you're going to take some money and put it wherever in Panama or something like that, you care about it being private, but you also care about being worth $1 million today and 5 years from now. And so, how do you think that kind of affects the adoption of privacy features within cryptocurrency? Because is there a world really where you just take something like USDC, right? Basically a cash collateralized token. Eventually, maybe there's a privacy layer upon some smart contract platform, and that's what really just wins. Basically, privacy-enabled cash collateralized token.
Yeah, I think that's definitely a possibility. It's a very good point about the stability. I will say that right now that's not realistic, because if you think of that one in particular, for example, as a layer above Ethereum, I think Ethereum's got enough to worry about without trying to add privacy at the moment. So, I'm not really holding my breath on that one. But no, I think the question is a very good one. I'm not sure I have the answer, but I think it's definitely something to think about.
Mm-hmm.
So, I think assessing the market size of privacy-related coins is very tricky, because it depends a lot on who you ask. Mm-hmm. They will tell you, well, but that's not a valid market, or you cannot build a company on the back of that, or a legitimate company off of the back of that, just because depending on, if you ask any government that is not, yes, currently supporting offshore banking, then they will say like, well, that's a gray market to us. Mm-hmm. And so that's not like a good market, therefore it shouldn't be, analyzed. Right. And you have like different degrees of gray within that, or different gradients, and so it makes it really tricky. So it's almost, to my perception, a bit of a binary bet. On either you believe and you like it and you think that there's going to be value created, and you have a long enough time horizon and you size your bet appropriately, and then you do it. Whatever the entry point might be that you consider relevant.
I mean, I actually think that, usage in dark markets is a good thing. I mean, sorry, I don't know if I'm supposed to say that, but like...
Not currently sanctioned markets is the way to put it.
Yeah, okay, whatever. I don't like the murder ones, but the rest, it's fine. No, I mean, look, I think if you look at the history of technology, like most of the interesting shit comes out of like illegal stuff. Like the internet, it was like a haven for porn and nothing else was ever gonna come from it. Like so much of the technology is really pushed forward by these kind of fringe use cases. So, I think it's a good thing. And yeah, I mean, the point was made earlier that if you want to launder money, like, guess what? People do that all the time in much more traditional ways. So, I think honestly, my biggest concern for privacy coins is really like getting meaningful adoption. I was mentioning this earlier, like right now, and folks are building great stuff that I think will really help with that. But I think it comes down to like, which privacy coin will win, or will privacy coins win at all, depending on the question, like, is anyone actually using them? And so far the answer is, but I think we'll see more for sure.
Got it. Well, in the conversations I've had, one interesting sort of point that people make is that unless it's private or anonymous, right, or shielded, however you want to put it, it's not actually like digital cash, right? Because there's kind of at some point, once these sort of go to different addresses and these are de-anonymized through services like chain analysis, they're actually not fully fungible coins anymore, right? Certain coins, if they come from, maybe, Mt. Gox, for example, it's actually very different from a freshly minted Bitcoin. So if you actually really want to have truly fungible digital cash, then privacy is actually necessary for that, right? Imagine if every physical dollar you spend kind of had like, the whole history of fingerprints on it. That would not make it cash anymore. So you're excited about the category, excited about the project. Can you talk a little bit more about what is it within Grin that you find exciting?
I like just how scalable it seems that it will be.
Yep.
Because one of the things that terrorizes me in terms of, say, cryptocurrency adoption at scale is that governments are going to start analyzing everything for everyone, right?
Yeah.
And you're starting to see governments that are not the most democratic. Like Venezuela is one case, right, where they're launching their own cryptocurrency, and you can very immediately see how that can be used as a way to, attack political dissidents and just snoop even more on citizens. So I think the notion of be able to keep the state of the whole network valid and also have it be scalable and lightweight is amazing. I like the fact that it doesn't have wallets per se, so that it can enable other use cases that can be more peer-to-peer. Again, like going back to this notion of keeping privacy and keeping things closer to the chest. So those are a couple of the ones that I really like.
Yeah, I'm excited about how it came about, in the sense that I think it's kind of the most Bitcoin-like thing in terms of its genesis that I've seen, and so I think that's a really interesting model, in the sense that I think it's much more fair and frankly more it just kind of harkens back to more of the ethos of what I imagine cryptocurrency was supposed to be, rather than like scammy ICOs.
And so on the flip side then, what do you see as being some of the risks?
I mean, there's like a million.
Yeah.
Well, I mean, where to start? Okay, so I think in the early days on the investment side, there's a lot of risk on the kind of how do you acquire Grin, right? And the main way has been through these mining SPVs that a number of folks put together. I think the challenge, and some folks in the room have run into issues with this already, is that, especially pre-launch, it was very unclear, like exactly what hash rates were going to look like. Okay, you say, I'm going to invest $1 million into this mining SPV. And the problem is you have literally zero idea like how many coins you're going to get on the other side, which makes it very difficult as somebody whose literal job it is to like assess risk to know whether this is a good investment or not. And so, kind of comes with the territory. I think people have been using we're using a lot of different proxies and saying like, oh, well, in Zcash's case, but like, really that's kind of questionable math because, the market looks very different. There's all these unknowns. So yeah, I think the risks around how do you acquire Grin in the early days as an investor, are numerous.
Rodolfo, do you have a perspective?
Yeah, we use a little bit of a framework of like what type of risk do you want to take, right? And so you can think about it in terms of technology risk, market risk, team risk, so on. And so right now, just Grin has the whole thing, like all of it, except for it launched now, right? And to some extent, the amount of hash power that has gone into it is reducing some of the security risk, just in terms of protecting the chain. So it's like over time, hopefully more of those risk elements start getting normalized, or you have a better sense for what will be the status of the situation.
And so when you think about turning sort of interest into actual dollars invested in the ecosystem, how do you think about investing and managing that risk?
Well, I think a lot of it comes down to allocating the amount that you intend to invest perhaps over a period of time. So saying, okay, I'm willing to invest a small amount now with all of these unknowns, or maybe I'm going to wait it out entirely, in the sense that like I mentioned, the inflation schedule makes it such that it is less of a strong incentive for early investors than it might be in some other currencies. And so, or there is less incentive for people to come in and invest early. There's also the question of what is the broader crypto market doing, right? So if you think, okay, there's not going to be a lot of new investment into the space in the next, say, like 6 months, some of the folks who are mining may then end up having to sell at lower prices just to cover their operating costs. Whereas other folks may instead be willing to wait it out, kind of more of the VC type investors. So, by the way, I think that these two categories of thought are kind of separate from whether the technology is worthwhile or not, or even whether something is a good investment today versus in 6 months. And that can be a very different equation. But I actually think that, incentivizing the early, or maybe kind of incentivizing a broader swath of folks to come into the community via the way it was designed is actually probably a good thing over time.
Yeah, I mean, the only thing that I would add is just setting a specific size of your exposure is very, very important in crypto, just because you have crazy amounts of volatility, right? And so often my suggestion to people is like, just put whatever you're very comfortable setting on fire. And
see, I've never understood that. Like, I don't like setting any money on fire. I don't know, maybe that's just me. But there's no amount of money that I'm okay setting on fire, really.
Alternatively, it's always a good time to invest a little, never a good time to invest a lot.
Yeah, okay. That I can get more on board with.
I mean, I remember...
especially when you're managing other people's money, the concept of just being like, ah!
No, but I mean, if you have a certain diversification strategy and you want to get exposure to a certain amount, right? Like you still are willing, I mean, at least in venture, right? Like your portfolio is construed so that you get, I don't know, like an early stage fund, a seed stage fund is probably 50-60% loss ratio, right? Like where that investment, whatever you put, is going to go to zero, right? So if you think about it in those terms, like it's, as long as you're aware that that's part of your model, then that's okay.
Now, how does the liquidity of not just Grin, but crypto assets generally affect the way you think about entries and exits and holding periods?
Well, I think it really comes down to position sizing, and I think we've seen some egregious cases of people misunderstanding the economics of that. So you might remember kind of the Ethereum flash crash, or I think it was Polychain who dumped a giant block of 0x and collapse the price tempo. So you see these kind of events which would never really or very, very rarely happen in traditional markets. And so I think you really just have to consider like, okay, what is the circulating supply? What does 24-hour volume look like? And think about, you know, what is actually going to move the market. Obviously, if you're trading OTC, it's a little bit of a different calculus. But yeah, I think that's a big piece of it.
A lot of it depends on your strategy, honestly. Like, I think part of what made the ICO boom so appealing to a set of investors was that you had very defined entry points that were very similar to what you would find in a technology company, seed investment, or a Series A or Series B, where you have a certain amount of something that it's getting sold, and you have a timeline to invest or not invest, and then that's it. So that looks similar to what a VC would normally do.
Yeah.
Right? I think for then liquidity, it just changes the game completely, right? Because you don't have necessarily some of those specific times where you can invest or not invest, and therefore you have to justify your entry strategy in your holding period and the management of that position in a very different way. I think like another thing that has been new to the market in the recent couple of years has been the ability to do short positions, right? Like where that was not that easy to do, and even then it's still hard given the liquidity constraints in a bunch of the markets. Yeah. That also creates a lot more complexity for institutions that are either playing long only or that cannot be trading in and out of positions for other reasons.
So, now that you have essentially infinite entry and infinite exit points, what are the metrics that you would like to see that would compel you to enter the market?
I mean, I don't know, my approach is kind of a combination of looking at actual numerical data points and the community. I think obviously Ethereum is in a tough spot now, but just in terms of scalability and so forth. But I think what got me really excited about it back in the day was just the level of developer enthusiasm around the project. And I think that's kind of hard to quantify. Obviously, if you go to some of the hackathons and things like that, seeing what people are building is probably a good proxy for that. So I think, just continuing to see, and including a lot of the folks in the room, what people are building. And I think given, how recently Grin launched, the level of interest and enthusiasm on both the investor and the developer side has been great. So just, I think, a lot more of that would definitely be part of it.
In a way, some of these metrics are going to be harder to see because, after all...
Well, you can see developers in the room. You can't necessarily see a lot else.
Yeah.
I mean, to me, it's like the teams, right? That coming at it from a VC investor perspective, it has to be high-quality teams building stuff related to this, right? That's the filter that we've been using for the projects that we've invested in the space. Go Catherine. And it's going to be something similar. I think it's going to be important to have a point of view on whether you believe that the value will accrue to the tokens or to companies, to the equity of companies building on top of the protocol or using the protocol. That to me is still TBD.
That is a very salient open question, right? That kind of plagues crypto all along. Do you have thoughts on that?
When it has come to ICO-related projects, we try to have exposure to both the equity and the tokens because we don't necessarily have a strong opinion either way. It's too early to tell.
Okay.
And so, when we can, we will try and get that hedge exposure because also we feel that way we're aligned with the entrepreneurs. Right? That you don't want to be long equity if they have liquidity on their tokens and they dump the tokens already, right?
Fair.
And similar the other way around. So you want to be aligned as long as you believe in the project.
So I don't really buy fat protocols. I think it is going to depend on the category. So I think in monetary use cases, including something like Grin, then you would actually see value accrue to the token or coin itself. I think in like more infrastructure type things, I just have a hard time seeing all the value being captured at the bottom. That seems like a really dramatic reversal from what we've seen in like the rest of technology. So I think my position is that value is going to be a little bit more evenly distributed than it has been, but I still think it's going to be fairly concentrated towards the top. But again, that's very different from things like Bitcoin or, I think privacy coins as a category.
And how much room do you think there is for, in long-term equilibrium for different players for, let's say, the monetary use case, right? There's Bitcoin, which is pretty well established. It's kind of got its corner of digital gold store of value fairly well defined, and enough people have bought into that. And so, when I first got into this, there was a lot of the sort of explaining why Bitcoin is important, talking about, well, we have 220 odd currencies, give or take, today, and that's kind of insane, right? But if you look at crypto, it's like over 2,000 right now. Now, obviously, a lot of that's probably going to the grave, but outside of Bitcoin, how much room is there, and should there be?
I think we'll have a world of like millions of tokens, because I think eventually there'll be security tokens and all this stuff. I think a lot of the infrastructure tokens will actually be abstracted away, so they will perhaps exist, but like you will never really touch them or own them. They'll be kind of handled machine to machine. And then I think that in the money category, I think there will be more than one winner, but probably not more than 5 that are actually meaningful. Because think about it, like money, I think it becomes more interesting and more appealing the more people have it. It's not something like, oh, I have this private personal Ariana coin and like nobody else wants it. Like it's fucking useless, right? So I think in money you'll actually see things be much more concentrated, whereas in utility tokens or things like that, it doesn't really matter.
I mean, you've even seen that with the U.S. dollar. Zimbabwe, right, took on the U.S. dollar. Was it El Salvador? So some of these smaller countries, and arguably more of them would if kind of banking relationships had different features. So
Very diplomatic way of putting it.
But I mean, geography matters, right? Like because money gets largely spent within, geographical constraint. Right, that lives under a certain
Zimbabwe
regulation.
Is pretty darn far away, right?
No, but I mean, all of those countries that are giving up their own currency is because they don't have any choice, right? Because all of the mismanagement of their monetary policy and the lack of, hard currency anymore to have reserves.
I take your point. Geographical adjacency potentially also. So those that are in.
But we like literally ship them dollars. It's crazy, by the way. In Zimbabwe, when I was there in 2013, which is how I kind of got into the space, but that's a story for another time. But the interesting thing is the dollar bills were literally the shittiest dollar bills you've ever seen. I was like, what is this? Oh, look, it's a dollar bill. I mean, literally completely overused. It was shocking. So yeah, just an aside.
I was just in Venezuela a couple of months ago, and it was just really fascinating because it's the same story. Like if you bring a $50 bill and it just has a little bit of a wrinkle, people won't take it because it won't be accepted locally, even though it's
Right.
Oh wait, that's the opposite.
Yeah.
Well, so you bring your ironing board, I suppose.
By the way, the petrol was not being accepted anywhere.
Just wash it in the washing
It's a joke.
So just one last question, from a prospective investor. How do you allocate in your crypto portfolio to privacy amongst all the other stuff out there?
So there's. It's weird. I go back and forth, so therefore I have a little bit of everything. Because one part of me says privacy will be a winner-take-all market potentially, because you just want to be hiding yourself in the biggest crowd. But then at the same time, I just see different implementations and different technologies having different trade-offs. And I believe that some are going to accrue more value than others, but I don't know which ones just yet. And so at least on the personal side, I just buy a bit of everything.
Got it. Okay. And you
So
can, because it's always liquid, right?
Yeah.
More or less, yeah.
I have to think about it differently from venture, where in venture you lead a round and you cannot sell that equity for the next 10 years because that's just shitty and you just can't.
Yeah.
Right? In this case, you can just buy in and out, or you can rebalance your position, and you can just be more quantitative about it if you want.
Yeah. Okay.
So privacy is about a third of my portfolio generally, so pretty much fairly concentrated because there's like 3 that are worth owning in my humble opinion, including Grin. But yeah, I think it's a fairly high risk category in some ways, but I do think that it's definitely the kind of thing that could really move the needle, and so that's something obviously I'm looking for as an investor.
Great. I don't want to overstep our time, but do we have time for questions? Yeah. Well, if we take 1 or 2 questions. Yes, sir.
What drives your investment thesis for Grin? Would it be the coin or the infrastructure behind it, so cryptocurrency, or does really the cryptocurrency value drive everything because it's sold with Bitcoin and the price crashes, infrastructure turns to be worth 0? Or is it really the price of Bitcoin because everything's correlated? So what's going to drive your investment in Grin? The price of the coin or the infrastructure or what's going on in the general cryptocurrency market?
Okay, so if I can repeat the question, gentleman's question is, what's going to drive your investment in Grin? Is it overall market conditions or sort of infrastructure development and progress within the project itself? Is that fair? Okay.
A mix of both. Because the thing is, you have to evaluate everything, right? More than anything, like at what level of adoption do you feel comfortable with the staying power of the coin, and then what is the right enterprise? And so that's where you have to think of Bitcoin and other asset prices on a relative basis. But I guess a lot of it will depend on your horizon, right, and your desire for liquidity.
I don't have anything super interesting to add, so I'll just say nothing.
Thank you. Okay, I think we're a wrap. Thank you. Thank you, Rodolfo. Thank you, Ariana.
Thank you, guys.
Okay, before everybody goes. All right. So I want to say thank you for our last panelists. Give them a round of applause. Thank you. Okay. Thank you guys for everybody who stayed here in their seats, cranked away. It's a pleasure to have you. I now turn it over to Catherine Nicholson as she wraps us up for the evening. You want to? There we go. Please give a hand to our organizer, Catherine, at Block Cypher.
And Tarek, our MC, my gosh, what would we do without you? I've known Tarek. He's probably one of the first people that I ever met in Bitcoin, and we just keep intersecting. He's just completely awesome. So we're going to wrap, and please join us for drinks outside. We have drinks and snacks. Thank you so much.